An always anticipated event held during the 2012 Cattle Industry Convention and National Cattlemen's Trade Show is the Industry Outlook provided by the marketing analysts of CattleFax. Volatility in the marketplace and how producers can manage their risk with these historical swings was the focus of the annual Cattle Industry Market Review and Update for 2012. Leading off the primary issue discussed by the CattleFax market analysts was the declining cattle numbers and beef supplies going into 2012. After 2 strong years of high cow slaughter numbers, topping nearly the highest level in 15 years, along with the drought in the southern plains, which decreased cattle numbers in Texas and Oklahoma, and shifted those cattle numbers to the more feed-affluent northern plains. Although Texas and the southern plains have returned to receiving near normal rainfall recently, predictions show that this region could turn drier again as we move into the spring and summer months. The northern plains has experienced one of the warmest and driest winters on record after nearly 5 years of cold, snowy weather. Not only are low cow numbers starting off this year, but this will also be reflected in the likelihood of smaller fed cattle supplies in 2013 due to the smaller 2012 calf crop. And if heifer retention does begin to unfold, feedlot supplies will be further reduced. More heifers will enter into the cow herds and less cow slaughter will occur, albeit based on moisture levels and weather. However, despite the decreases seen in the cattle numbers in the U.S., increases were witnessed in beef exports, with beef exports up 23% in 2011 compared to 2010. Analysts believe that the global market trade added an average of $261 per head to fed steer prices. A robust beef export market improved the overall demand for beef, and all projections show that exports are likely to improve even more as we go into 2012. Some of this improvement in the export markets will continue to come if the Japan marketplace continues to move forward with opening up greater accessibility to U.S. beef, creating an overall improved beef access of U.S. beef in Japan. The analysts went on to report that 2012 could bring record high prices for all classes of cattle. Calves could average as high as $175 a hundredweight, and yearlings will predictably average about $150 per hundredweight. With these higher prices, feed yards will struggle, though, to have the margins needed, tightening up their profit potential. The industry has seen staggering production cost increases, and we will see some moderation in these costs. And with these higher costs, it's taken a lot of capital to do business. Feed cost increases alone have added $550 per head to the feeding industry and added an overall total of $16 billion cost to the industry. In conclusion, CattleFax predicts the shrinking cattle supplies and higher input prices will continue to have an influential impact on the beef industry's structure in 2012. If margins shrink, this will be reflective on reduced feedlot and packing capacity. As higher prices lead to increasing market volatility, producers should manage for a margin. Don't guess the markets in a volatile time, because we are witnessing how important increasing price risk has become in production agriculture, commented Randy Black, CEO of CattleFax. It's interesting to see how optimistic things can be if you look at it. Randy went on to say, "I'm thrilled to see the opportunity for the industry to expand and for the cow herd to grow over the next few years, but we still need to be mindful of the risks at hand," said the CEO of CattleFax.